Good day, ladies and gentlemen. Today I want to talk about how you can actually master trading as a beginner. Okay, so basically, I won't be focusing on the aspect that has to do with strategy. All right, so I won't talk about the strategy aspect where you have to master your strategy and all of that. So that's not what I'm going to focus on. I'm going to focus on another part which is equally important, and that has to do with your psychology. Okay, that has to do with trading psychology. All right. So this is a topic a lot of traders overlook. They just feel all they need is a strategy and all of that. But the thing is, your psychology can actually affect you. All right. If you've not worked on your psychology, you are going to be affected in terms of the kind of way you're going to be trading. Okay. So if you have not mastered your emotions, if greed still overtakes you, you overtrade. When you lose, you revenge trade. All of those things, they are going to mess you up. Okay. Sometimes it might not even be your strategy that is poor. It's just your psychology that is having issues. And the thing is, you can't mistakenly make it work. No, you have to consciously work on it. You have to consciously understand that that aspect also influences your trading. Okay. So psychology really matters. Let me just give you this. It's something you have to go and think about. There are some persons that perform well at trading. Okay, they perform well at trading when they know they have enough extra cash left in their bank accounts. They perform better at trading in such situations. Okay, in fact, most traders I know perform better when they already, like, they have a buffer, they have something they can fall back on, so it takes the pressure off when they are trading. So but if you're trading from the point of survival, like you are trying to survive, even when your strategy is good, that psychological aspect can actually mess you up, because you don't have anything to fall back on. You are only focusing on that trading, like it's only the trading that must pay you. If it does not pay, every single loss you take is like the world is about to end. Then you are not really in a great position if that's the case. Okay, trading should be like a business. Okay, that you give time. It shouldn't be something that all of a sudden you must profit in order to eat from it. No, that's not the way trading should be. Okay, you should have some money by the side. That's why sometimes you are advised to trade with what you are okay losing. Okay, what you know that you are comfortable losing, that's what you should trade with. The reason why they are saying that is they are not trying to tell you that this is a business where you lose all the time. No, that's not the case. That idea is because if you're trading with an amount, or let's just say something that you can lose, it means that you actually have enough, or you have some money left. So the fact that you have some money left, whenever you're trading, you would end up taking better decisions, because you don't have that pressure of you must actually eat from this today. If you don't profit today, you might not eat. No, it shouldn't be like that. Okay, so that's one thing. Now another thing I want to quickly chip in. I'm just talking about these things from my heart, not as if I didn't really plan a script for it. I just decided that, okay, I'm going to record a video, I'm going to talk about these things, because it's something these are things that I have also passed through. All right, so I don't need to plan to talk about it. It will just flow. Okay, so just take it as it is. Okay, so the other thing I want to talk about is the fact that a lot of people talk about risk to reward ratio. Okay, they talk about risk to reward ratio, but they do not understand what this risk to reward ratio is. I'm focusing on forex psychology. You don't understand what this risk to reward ratio is. You say your risk to reward ratio is 1:2. All right, but pay attention. This implies that you are very okay losing 1 in a bid to get 2. We just take this thing as face value. We don't really think deeply about it. You are okay losing 1 in a bid to get 2, which implies that you are okay, for example, losing $10 in a bid to get $20. That's what you're saying. Okay, so if that is what your strategy is about and that's your risk to reward ratio, fine. I'm going to point out where the problem is now. You are the one that said your plan is a 1-to-2 risk to reward ratio. Why then is it that when you take a trade and you lose $10, you feel bad? You feel as if the world is about to end. You want to revenge trade. You want to squeeze the money back out of the market by force. Why? You are the one that just said you are okay losing this $10 in a bid to get 20. Why then are you feeling sad that you lost it? So it implies that psychologically you are not really okay. You are not really okay losing this $10. Probably you would have been okay losing a lesser amount. So that lesser amount is what you should scale down to in order to take the pressure off. The game is a pressurized game already. Do anything possible to take pressure off. Okay? Don't pile more pressure. If you're piling more pressure, you're setting yourself up. You know it's not okay for you to lose $10, but why do you want to lose it? You're only looking at the bright side that you can actually make 20. No. When I learned something in a business book I read some time ago, and it's very important. It says when you are estimating your profits, estimate it in a lower manner. And when you are estimating your risk or expenses, estimate it in an higher manner. So if you're looking to make a profit of $100,000, for example, think of possibilities, all things being equal, something might happen that will make it not be $100,000. So reduce that expectation to probably $70,000. And when you're thinking about your expenses and you think, oh, your expenses for this business will be $30,000, take it up a bit, because exigencies can come up. Things that you did not even plan for can just happen. So if you're thinking what you're going to spend or your expenses will be $30,000, just think of it like, okay, it could be $40,000. All right. So in the same sense, don't just focus on the bright side of your profits. Okay, think of the possibility that it might not play out the way you have planned. That implies that what you should focus on should be your losses. That's what you should focus on. What you are willing to lose. If you have a $50 account and you're saying you are okay losing $10 with a 1-to-2 risk to reward ratio, because if you win $20. Is the $20 that is making you say that? You are not really considering that $10. If you lose the $10, you start feeling bad. So probably what would have been okay for you to lose on that $50 account was $2. $2 is an amount that probably if you lose it, you won't really feel it. Psychologically, you will still be very, very okay to wait for your setup, to wait for your trades to come up. So why not go with the $2 and look out to make $4 per trade, since you are using a 1-to-2 risk to reward ratio. Look out to make $4 instead of looking out to make $20. Okay, so you need to be certain of the amount you are willing to lose that will not affect you. Don't just say, oh, you are willing to lose this amount, whereas you're actually looking at the profit side, not looking at what could possibly happen if you end up losing the amount. All right, so that's just what I want to talk about today. If you got any value from everything I've said, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.